Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has managed to pare back some of Friday's losses on Monday against its rival, the US dollar, as the bulls reclaim the 60-day moving average. However, the break hasn't generated much momentum, as we can see by the RSI still flirts around the midway point. Along with that, with the MACD being negative, does give some concern that we may see the market drop back through the 66.90 level and take on the challenge to 66.30, and with the base holding around 65.50-65, a key point. However, all this is viewed now from a New York close to support the trend. Close above the 60-day moving average would support the bullish case, but at present does look a little bit to the concerning side that we may see a close under the New York close, that is, of 66.90 to support the bear case, which was initiated on Friday, and looking to that downside target, as I mentioned, at 65.50-65. Looking ahead, the RBA, or the Reserve Bank of Australia's interest rate announcement awaits at 2:30, which is favoured by seeing a 25 base point rate hike. Viewing that, the market will be keen to see what the statement has to say as investors and traders assess whether the RBA leaves the door open for future monetary policy tightening. Following the RBA, the main event for this week will be the US non-farm payroll numbers, which hold a forecast around 200,000 jobs added, with the previous of 209. Looking to the euro, the market was weaker and still remains that way, and therefore looks towards, first of all, 109.55. A break there will give further scope down towards 107.50-80. But let's see if the market can crush the level of 109.55 before getting overly bearish. Looking to the top side, the resistance comes in around 110.35. The market bulls, but they're not backing down for dollar yen, as we can see that the top side target of 142.50-60 claimed, and now puts further scope onto the upside. But I'm getting a little bit concerned due to the bearish divergence here. The MACD is very or somewhat bullish, and therefore could see further scope up towards 144. Depending on the divergence on how strong the technicals have support, and so far been relatively firm. But the key level, that is around 142.50-60 being reached, I'm now watching to see if profit taking emerges. Moving on to sterling, well, Super Thursday still keeps an eye on the market, but then 50 base points or 25 will emerge from the Bank of England. Looking to that, the broad uptrend, as we can see here, which comes in around 127, figure 20, looks like the challenge is still going ahead due to the weak technicals. A bounce from there is anticipated, and even seeing a rebound of a bull run. But note how this pattern is forming here. We've got a left shoulder and a head, so we could be forming a shoulder up towards 130 if we see a bounce from 127, and then maybe another down test. Gold, well, the market still holds to that bearish outside range day and still to the downside, which is seen somewhere around as a trajectory target, that is, of 1,915.35, with any upside attempts expected to be limited beyond 1,964. And wrapping up with oil, well, the market is not backing down, and now the divergence has been negated. For myself, I feel that $81.60 was the target, and it has been reached. But for those trading, well, I'm holding a neutral view now. But as I mentioned, for those trading, could look towards 83, 40, 50. But the ADX is overheating. We are overbought, so I'd rather sit out for the moment and take profit if I was long, and see if the market does reject that top side area around April, which is around 83, 40, 50. If so, a pullback could be shallow, but still looking to a potential target around 79.5. Well, that's a wrap. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the rest of the day.